All right, so we're gonna analyze Bitcoin and see where are the trades right now. Can we take any trades? And if not, we'll do an overall market analysis and we'll see what trades we can anticipate in the coming hours or days and take them as they come in a group. All right, if you guys have any setups as of right now, just let me know and we'll go over them. Right now, it's just looking at the 1 minute charts, so super granular on Bitcoin. Looking at those overlays that we have with the indicators and looking at Porcupine with the long signal, short signal, and just how it performs in general. So yeah, it's good to see how it's doing. And we can also take a look at the 15 minute and the 5 minute to see the performance of the scalper, which is doing pretty well right now. I like the combination of the scalper and the overlay, and the time to enter for the overlay is when the overlay stops, right? So when everything tops out, it tops out, and that's just how our stochastics work, right? So when they top out, it's essentially a warning. The second the overlay stops, so the second the overlay ends, means that the stochastics were topped out and were bottomed out. Now they're not anymore. So now we're catching the move before, after the alert that we got, right? Same thing here. Same thing here. The first time you have the black color, that's when you enter. All right. And when you have it, overlaid with the scalper, which usually the scalper is just going to enter at those times anyways. But yeah, it seems to work pretty well. Even here, even here. So yeah, that's on a 15 minute. We can take a look on a 5 minute as well, which is the same thing, just more granular. So let's take a look. So yeah, scalper is doing its thing, and the overlays are going to be more granular here. So they're going to end, they're going to start and end much earlier and quicker, because it's taking the same data, but the decision making is more often than it is on a 15 minute, 3 times as often, because obviously 5 minute candles on 15 minute candles. So yeah, whenever the colors end and we have the black color, that's a good time to enter. So those are just the scalpers, but that's not exactly what we're going to look at right now. We want to see some larger moves on Bitcoin, and then project that onto other crypto coins. And as we do that, get an overall analysis of the market, and then we can either enter now or we can anticipate trades. We will look at possibilities to the upside, to the downside, anticipate them, and then set up our orders and our trades on multiple coins to hedge ourselves in both positions and make sure that either way the market goes, we'll profit off of it. So this is a setup that can take multiple days. It's a setup that can be done right now. It just depends what the market gives us. And this is usually how I trade. When I want to trade, I look at the overall analysis, and then I see, okay, how can I place my trades, place my orders in the market to have both possibilities, upside and downside, covered? And obviously that those hedges need to add up as well in order to be profitable in both of them, or at least have a stop loss hit on one of them but a large profit on the other one. So overall, it just needs to make sense, and that's something we're gonna go over right now. So we'll start with Bitcoin. 15 minute is just about bottomed out. 5 minute is bottomed out as well. So, short term right away, I'm looking at we might bounce off of here. We're towards close of the range here. Let me just take a look and do a little range here. So yeah, we're towards close the range on that 15 minutes. So we can bounce pretty early. So if I was just scalping here, I see the 15 minute bottom. Now let's see what the 3 minutes doing. The 3 minute is starting to go to the upside. I'd like to see this continue a little bit 1 minute's on its way as well. So this would be a great time to just do a very small long position here, which, by the way, is actually something that the scalper did, isn't it? Yep, exactly. So you see it works, right? You see it works because it's thinking the same way as I am, which was the point. All right, but that's besides the point. This was just a little small trade that I would just do right away if I was in the market, or I'm looking at the market right now. Right, I wake up, I want to trade today, or I want to get some setup. I look at all the different time frames, and I start looking, and I see 5, 15, 3 are aligned. We're towards the bottom of the range. What's the 30 doing? 30's towards the bottom. That's just like a small cheeky long here. So I could just set this long up while I do the entire analysis and just have it just to get a feel in the market, right? Low account size, just scalping size, and just get this trade in, which will calibrate me as I'm looking through the market. All right, so 30-minute is towards the bottom, and our 5 and 15 are bottomed out. So what this looks like to me is when we go higher to the time frames now, what's going to happen is that those stochastics are just going to be earlier and earlier in this move, right? So we go to the 1 hour, it's earlier in the move, 2 hours topped out, 3 hours going up, 4 hours going up, 6 hours going up, 8 hours going up, 12 up, daily bottomed. Okay, so this right away tells me we might have a move higher to the upside, towards the top of the range, which makes sense. Let's check the weekly. Weekly and monthly are topped, sorry. Daily's bottomed. So we might have some upside here. Our higher time frames are supporting us. Our lower time frames, which is 2 hours and lower, are on the move down, and the 30 minutes just lower down. So based on the small time frames, 5 and 15, short term we're looking at a long. Mid-term, we still have the 30, 1 hour and 2 hour, still some, they still didn't finish their move. So we have two possibilities. Either they turn around midway and start going further up, or they will all bottom out, reload, and then we will go further up. Because on our higher time frames, we're just going up, right? And it also makes perfect sense here because we have a move to the upside here, and we have a small retracement here, right? So as the 31 and 2, it's possible that they will still bottom down, in which case we would have our long on the small time frames right now. Then we'll have a short, a little bit bigger of a short in the mid time frames on our 30 to 2 hour, and then we'll have a big long at our long time frames as the 30-minute as the 30 and 2 hour, the mid time frames bottom out and the lower time frames bottom out, right? I hope this made sense. So our lower time frames are bottomed, going up. Our mid time frames are going down. So what will happen is that our lower time frames will top out and start going down and go down together with the mid time frames. And then, that might be another cycle or 2 cycles in the lower time frames. And then once the mid time frames bottom out, they turn around, our lower time frames bottom out, turn around, and our larger time frames are going up already. And then that's going to be a larger move. So that's how it looks like to me right now. So right now, as we have our long, it's just, it's just playing out as we're getting set up here. What we're going to do now is we're going to look at what the possibilities are of what can happen. So first of all, our higher time frames are pushing to the upside. So what is possible, right? We can just, do this on the 4 hour. We can do a trade around here. Around here, with our stop loss down here and our take profit levels higher up, right? Possibility to go here, but this is a level and then this is a level as well. So that's on a 4 hour, right? If we go higher, let's say go to the daily, we could plot a larger trade. Same stop loss actually, towards the top. Okay, that makes sense. So as we have that, right, on a daily, that means that if I had to put in an order right now and leave for a month and not look at my chart, I would just set it up this way somehow. We're not discussing the downside as of yet, but I would look at it this way. So I would set it up like this and just leave, and 1 month later I would be confident that, you know, this trade is okay. So so that's on the higher time frame. However, in this stop loss area here, in this risk area, there's a lot of movement, because remember, we're in a daily. There can be a lot of movement in this red area, which are our lower time frames. So as our 1 hour and 2 hour top out, what we can also look at is a short that will happen somewhere around here with the take profit at the downside, which is the stop loss of our larger trades right here, right? And then we have our smallest time frames, or small time frames, which is a long that's playing out right now, right? So like this, based on the small time frames, the mid time frames, and the high time frames, we got an overall idea of how this can look like. And really how it can look like is like this actually. So we have our long, which is playing into our stop loss area, or our losing area of our short. Then we have our short, which is playing into our losing area of our long, and then we have our long, right? And the good part is that we are profiting. Instead of entering a short now and being in a loss, we're going into the losing area of the next trade, but we're profiting off of the current trade right now, right? And this way, looking at it this way and anticipating what can happen based on the different time frames, because that's literally what the time frames give you. When we look at the 5 minute here right now, this is the current time of the 5 minute, right? But we know the momentum of the 3, 4, and 6 hour, which are large time frames that we don't even see right now. And you can beautifully see that on when we set up these trades, right? So when we set up this trade, and we just look at this time frame, look how small this trade is here, right? This is a small trade. Just, you know, just looking at it visually, it's a small trade. When we go to the 5 minute, it's a very large trade, and that's the same trade, right? So see the area in time and price and how different it is from a different perspective. So when we know on the 4 hour, when we know, like, see this trade here is a very short in time, and we see that the 4 hour has a strong momentum to the upside. So we know what the momentum, what the inertia is of our higher time frames in the future of our 5 minute time frames, right? Because we're projecting, we're extrapolating, we're projecting the line further out on the higher time frames, but because the higher time frames are so much higher than the current time frames, the lower time frames, then we actually get a lot of projected data. Even if we would just project one candle ahead on a 4 hour time frame, on a 5 minute time frame, that's, you know, hundreds of candles. So, well, yeah, 100 candles or something like that. So yeah, our longs playing out pretty well now. Like this is a take profit scenario here. Definitely taking some profits as we reach these tops here, and we could probably go even higher. So that's my projection right now, that we have our low time frames that will just go up, right? As the 5-minute did here, as the 15-minute did here, as the 30-minute is turning around here. So as those turn around, we'll go further up. Possibly we could move the 1 hour higher. We'll see, depending on if this 1 hour turns around and goes further down. And the 2 hour is just topped out, ready to go further down. So overall, we see a bullish move here. Possibly bullish move here. Possibly this cheeky short can play out. Right? So that's just analysis wise. That's what we see right now. That's what we see right now. Now, so overall we're bullish. Midterm right here, there's a possibility for a short, but you know that should probably go towards the bottom of this support level, maybe a little bit lower, and then turn back around, in which case it will be a very, very good entry for our longs. So that's what we think. That's our thesis, right? Part of our plan now has to be the exact opposite of our thesis too, because what if we're wrong? So what is the other possibility? The other possibility is that, well, either we go up, right? Or our short here plays out, but it plays out a little bit better than we thought, right? And we just go further down here, which is possible. We can hit like 30K or something like that. In which case though, like what timeframes could be supporting this? Well, let's see. I think the 6 hour was, yeah, the 6 hour is slightly turning here, if you can see it. Slightly turning here. 8 hour still going up, daily still going up, and our super large time frames, which, you know, the effectiveness of these time frames in the lower time frames are not that strong because they're so large. But these ones are pushing down quite a lot. So and if this move plays out, then we could even see 25K, right? So this is a possibility. I'm not going to say it's going to happen. However, when we set up our trades, it is very, very important that we understand and think about all the possible scenarios. So the way we're setting up right now is we're a little late to the party, not gonna lie. If we would start this call a little earlier, we would set up the long a little earlier, and if we would analyze everything enough, we might have even some short entries in this red area for the short, because the short is a possibility. And on top of that, if the price goes, or if the market moves against our thesis, which our thesis is overall up and then at some point hitting 46, 47K. If that doesn't happen, well, what's the other possibility? Well, is that we're go short, right? So our midterm short here, we can use as a possible hedge as we go lower. How can we do that? Well, in order to do longs, right? In order to do longs, what we would do is, like, maybe we can get into, I wouldn't even do that. I would set up some orders for our longs, our long positions right here, right? To hit our long and our 4 hour and our daily. So to get a good entry here, because when we get these entries, then it's going to look much, much better. And our average, our risk to reward will be insanely high, which is what we want. We want a really good deal, and we can get that because we're anticipating the trades. So that's good. However, we have a short here, which is a possibility to happen unless we just keep going further up. So right now we're in a long, we took a little bit of profits, right? It's a small scalping long here. However, we're in a long. So if we keep going up, we should probably add in, as we go to the entry price again, we could probably add in a bit more, where in case we would just completely go up to the upside, we would have some position in. The other thing is that once we move with the price towards the red side of the shorts, we can add in or enter into our shorts, and then possibly, like, you know, very, very likely, when we have a big move here, we will probably go and, you know, test another low. And as we test another low, we will be profiting in our short while we enter orders and add in trades and build up a position for our longs. However, that is covered and hedged right now. So what we do is we get a better entry on our long positions while we're in the profit of our previous short. Worst case scenario, we hit our stop losses here and we continue with our profit of our short. Or if we turn around, we exit that short in profit and start profiting off of the great average entries that we had into our longs. So we have three scenarios what can happen, right? Let me actually draw it so it's easier. Scenario number one is we already touched the bottom and we're just gonna go up, plus or minus. Scenario two is we're gonna go up a little bit and we go further down and keep going down. And scenario three is we go further down and turn around and go further up. So those are our scenarios that we see right now. There might be more scenarios, and as we get more possible scenarios, we can add them into our theory and think about how we can solve it if that scenario were to happen. And as we do this and we plan out what can happen, right now we already have three scenarios and we know exactly what to do in every single one of these scenarios, right? Scenario one, we can enter, so right now we're long, right? We can enter a bit more if we go further down, or we just hold this long, you know, in case we go up, we would still have, you know, a good amount of profits, because the scalping size, you know, if we just keep going further down, then the percentages make up for it. So that's scenario number one. Scenario number two is we get to our tops and we start turning down. So as we go to these levels, even when we're still long, we'll start averaging into our short with a, you know, a larger size than we had our scalping longs. And there, the possibility is that, you know, we get our average entry somewhere here. The possibility is that we either turn around and go down, or we break it, we hit a stop loss and we continue going up. Either way is fine for us, because we would either just hold our long or we would start going short, which would profit off of our short. As we go down, two possibilities: we turn around and bounce up, and as the time continues, we will have more data on our stochastics, which will give us more insight into what scenario can happen. If we have some pressure on the stochastics further to the downside, it can just happen and we're just in our short, right? So whatever happens, we're just profiting off of the short. Or we turn back around, and as we turn back around, in this time, even when we're going lower and we're hitting the short, we're entering our average orders for our longs, and worst case, they get stopped out and we continue our short and profit. Or we turn around and our average orders start profiting and we exit our short and profit, and then we're in our long, right? And as this keeps playing out, as time goes on, we can invalidate scenarios, and we can add in new scenarios based on the new data that we get. However, what we're not going to do is stare at this for every single minute of the day, because then you start getting in more scenarios that are less likely to happen and you start overthinking. Ideally, what you want to do, what I like to do, is looking at the market 2 times, maybe 3 times a day, regardless if I'm in a trade or not. Because I will set up my trades exactly so no matter what happens, my trades are taken care of, right? I have my order set. There's no loose thread on my trades, right? So that's something important. Okay, so right now we looked at the stochastics. We have our higher time frames that are bullish, mid time frames that are bearish, and lower time frames that are bullish. So short term bullish, mid term bearish, long term bullish is what we see right now, right? This can change tomorrow. This can change 2 days from now. This can change 5 hours from now. But right now, this is what we see. So we build our scenarios based on that. And we build our scenarios not long only, and we just hope that we're going to go long. No, we have scenarios. What happens if we go long right now? What happens if we turn around and go short? What happens if we go long after we turn around and go short? All those scenarios are thought about and taken care of, and we know now what we will do in any single one of those scenarios, right? So we have scenario 1, scenario 2, and scenario 3. This is Bitcoin, right? So now we have our overall, and obviously where Bitcoin's going to go, it's going to move the entire market towards that. However, the move itself can look differently on different coins. So we have our short-term long, mid-term short, long-term long. But it might look a little bit different on different coins, so they can give us more insight into our overall market thesis. And also, these coins can give us better setups for either longs or shorts, or both. And if that's the case, then we might move our short here, for example, into a different coin because it looks better for a short, and leave Bitcoin for longs. Or we find some coins that are looking better for shorts, some coins that look better for longs, and we use those and just use Bitcoin to hedge against that. So and understand that, yeah, it might be a bit more complicated to trade this way. We don't just look at one single trade. We look at the overall market and we see how can we position ourselves into the market. So probability-wise, whatever happens, we end up profitable. And this is a completely different thinking. And yes, it might be a little complicated at first, but once you get the hang of it, it's actually much easier because you're not stressed at all. Because in this situation, once you're positioned, it doesn't matter where the price goes. You have a plan for every single move, right? And you're going to profit on every single move. So you're not stressed if the price suddenly turns around and goes another way, which when you're in one trade, you are. And this is how institutions trade. So this is how we want to trade. So that's what we have right now. Let's take a look at other coins. Let me just copy the tab and open, say, XRP, Solana, Chiliz, FTM maybe, or Doge. XRP, Solana, Doge, FTM. Okay. Here we go. So let's see what XRP is doing. XRP topped out going down. We had a pretty big move to the downside. I don't know when I did this trade. Maybe I did it in a call. Not really sure. Lower time frames. Lower time frames are, in fact, topped out, starting to go down, except the 5-minute, 15-minute, 30 minutes going down. So this looks, in fact, further bearish. And our higher time frames are not supporting our bullish move either. So, yes, this might make more sense to, I actually got to check if I'm in a trade here or not, because I really don't know. Maybe I entered here. I got to check. But regardless, let's just assume I didn't. So we could have a bearish continuation here, which would which would be a larger move, just looking at the projection here, which would be probably a larger move because this is 18% and this right here is 4%. So we would have a bigger lever in our short right here. Solana looks bearish to me just looking at it right away. Topped, going down, topped. Let's see, topped and turning. Once again, looks more bearish to me. Doge, 1 hour bearish, 30-minute bottomed, topped out. So 15 and 30 kind of need to get in line. Either they top out and we go further down, or they move everything further to the upside. Our higher time frames are going up. Okay, see what FTM's doing. Lower time frames topped, mid time frames actually going down, higher time frames topping. Okay, so on our altcoins overall we see a more bearish situation. What I like to look at as well, let's just look at what the bundles are doing real quick. I'll just look at the index here. Let me go to the index and see how we're trading here. I think we're partly short. Let's take a look. Right. This is short. No, this is a long, and these are shorts. Okay, so similar situation actually. Our altcoins on our dashboards are shorting, which are trend following strategies which work relatively well. And they've already made like some 20% or something like that, or close to 30% together. But that's something important to look at. Okay, so definitely something. We might have our bullish long, but we definitely want to cover our short side as well. So I would still add in some orders higher up here for my short. If they hit, fine. If they don't hit and we just keep going down, then they don't hit, because I'm going to set up short orders as well on my altcoins. And no matter, and here's the point, no matter where I get filled, I can be very aggressive on where I want to be filled, because no matter where I get filled, and probability is that I'll get filled at least on some of these coins to my downside. No matter where I get filled, I'll have a great deal. And I don't care which coin it is. I just want to be in the move towards to the downside, right? Because as the market keeps going down, I want to get a good deal, and I want to have that move to the downside, even when I'm looking to enter longs for a larger move to the upside later on. Same thing here. So I want to add in, I want to set up my shorts and wait for my altcoins, some of them to hit. I don't want all of them to hit, by the way. Just 1 or 2 trades is good. Plus my Bitcoin possibly if we go to the upside. If we do go to the upside right here and fill the shorts, and see how I'm looking at not one entry price, but I'm pointing at the red area of the trade is where I want to enter, right? It's an area, it's not a single line. There's going to be a grid of orders. And if we go to this level, then I have enough profits in my long still, of my scalping long, remember that. So I'm profitable there. I will leave some in for the possibility of going further up, but I will enter, I will start DCAing into the short for the possibility of going lower. And that is if Bitcoin goes further up and then turns around. If it doesn't, then we have our altcoins here which can do the same thing. So possibility for a liquidity grab before we move further down is very high. So we'll hit at least one of those, and then remember, if we hit those grids, then our entry order, like our average entry, improves exponentially, because our DCA entries will get better and better. So yeah, that's what we're looking at right now. Bitcoin looks like there might be a large move unless the super high time frames will start the momentum move down, which would be a big move down. So we want to think about the possibility of both directions, and with the possibility to the upside, we want to ideally enter in lower and have a really good entry. Or for the shorts, we'll want to enter in higher, and we do that by, by setting our net in multiple coins, and whatever hits. And when we do this, and when we just set multiple nets, what happens is that we're not fully reliant on one single trade, on one single price action to hit our levels. Because if that happens, or if that doesn't happen, then we're not in a trade, and that's not good, right? And because of that, because there's a possibility that it might not happen, we're more suboptimal with our entries, and so on and so forth. It just trickles down into just bad trades, really. But by having the option and the possibility of doing this trade on multiple charts that are slightly different, you can set your ideal possibility, your ideal setup, and the chance of that hitting is much higher by multiples, obviously, right? Mathematically. So the chance of that hitting is much higher by multiples, so you don't have to settle for worse trades and worse setups and worse entries. I would rather set up really good entries. Some of them hit. The ones that hit, I will trade. The ones that don't hit, then obviously nothing happened, right? Literally nothing happened. And the ones that did hit, now I'm in the move, in the crypto market move, and I am in really well. And I have a better entry, and I have a better setup, and I have a better deal than 99% of traders. Because I did the extra step, right? Because I ran the extra mile when looking at the market and when planning out my moves. Right? We're planning out the moves. We don't just react. We don't look at the market and react and FOMO in and hope that it goes well. No, we plan ahead. If the move's happening right now and it's not planned out, it's too late. You can start thinking about the next move. And if the next move, when that next move happens, or before it happens, you plan out all the different possibilities. And as you have the different possibilities, you can plan out your game plan, whatever happens, where you enter, where you exit, where you can hedge, where you can profit off of one trade while you're entering into the other trade. So you're literally flowing the profits into a good, really good entry of another trade. And while you do that, you start hedging your position as you go in lower to more riskier levels. And based on that, you just got way more possibilities of you entering and playing the market. And because of that, you can be much more picky with the setups that you do, and the result of that is, on average, much better risk to reward, much better win rate, right? Because if you anticipate the trades and you wait for the trades to happen to you, then the probability of those playing out is much higher, rather than just FOMOing at some random level, and then the possibility is that it's going to move against you very quickly. So you improve directly the main metrics here, a win rate and risk to reward ratio, and because of that, taking your performance and extrapolating it over 1,000 trades, you'll be very, very profitable. So our job right now is to look at these three scenarios, right? Scenario 1, directly up. Scenario 2, short, right? So we move slightly to the upside and we go short. As scenario 3, we move down and we start moving to the upside once we hit the bottom of the range. And we see that on Bitcoin, but we will extrapolate this onto the other altcoins where we'll expect a short to happen and expect those levels to hit for us to enter the short. And this is the setup. This is the current setup that we're looking at. And as time goes on, we can keep discussing those three scenarios, maybe add in a new scenario, maybe invalidate a current scenario. And as time goes on, you will always have scenarios to trade, and you will always, constantly think about and invalidate other scenarios. And because of that, when the price happens and plays out the way you expected it to, you will be prepared to enter, you'll have the best entries you can possibly have, and you will be the most profitable in that move while you have a very limited risk because we're hedging across the different risks. So those are the three scenarios. I want everyone to write it down or memorize them. And as Bitcoin keeps playing out, I want us to look at it in the Discord and discuss the three different scenarios and see how we can enter, when we can enter, what good prices to enter. And then we will trade or play out those trades within the Discord, whether we go to the downside or we go to the upside, and we will see how we can make profit either way. So that's the overall analysis. We're going to look at it, write it down, analyze it yourself. If you have more things, indicators, price action, whatever you see for these three scenarios, maybe you see another scenario, maybe you think we should invalidate a scenario right away. Whatever it is, write it down in the Discord, and then we discuss it, and based on that, based on those possibilities, we will start trading this move. All right, so that's basically everything right now. Tomorrow, we will look at this current situation again. We'll see how it played out, if we were right, if we were wrong, and then again, we'll look at different scenarios. And as we do that, we'll get a better and better idea every single day of what's going on. And it's going to be much, much easier for us to trade those trades, to trade these swing trades, which have large moves and have a high probability of happening because you have a lot of time frames that you can work with. There's a lot of time frames that are relevant for this kind of moves. All right, so that's essentially all I wanted to cover today. I hope it made sense. There's a slightly different approach in trading that is commonly known, right? We don't just do one trade. We look at the overall market and we see how can we position ourselves in order to cover all the possibilities of what is going to happen in the market and profit either way. So, that's everything from my side. If you have any questions, let me know. And otherwise, I'll see you guys in the Discord.